climactic action into the buying climax, change of behavior bar, change of behavior itself, automatic rally, secondary test, phase A, and we're done. So here's the argument, for the bearish case. Look at where the sell-in comes. The sell-in comes on the way up and then on the way down. It's all going to be associated with the beginning of the war on February 24th. So first impression is like, oh gosh, that's it. Like we are going to be squeezed on the oil prices. The second impression, we don't know. So let me just sell and then go into what? To go into the period of inactivity, which is very, very much, a part of the TP formation, which is of the distributional quality. And that's kind of like what led to the call on oil right here around this area. The call was that we're going to see $60 by September 1st. And as we go up, we're seeing upthrust. We're seeing another upthrust. This was the most meaningful upthrust because supply is coming in bunches here. We're losing momentum, and then this was the key bar, the point of entry bar, calling for lower prices. Supply is increasing, and we're seeing the first minor sign of weakness, followed by the last point of supply. Then I really like this extension. To me, this is just like one formation right here.
Yep.
So in itself, this is a sign of weakness, and then we can't even come, to this level. So again, weakness here. And then yesterday's bar is confirming all of that weakness, but an elusive concept here. So now let's kind of like increase the size here. What's interesting here, William, is that it didn't break the support. It didn't commit below the support.
It didn't.
And you and I, we love this type of bars. So give us
Like
your
to usually buy those bars in the intraday environment, don't we?
Yeah. So give us and then also let's discuss it as an analog. Like, what do we see here?
Yeah.
With all of this
Here
analog
we
bars.
break down valid break over 50% of our spread, closing under our area of structure. Here we break down, not a particularly good break here, Roman, but look at the volume associated with that break.
Yeah.
It's definitely. Yeah. I mean, look at the size of the spread. Sometimes you have to, analyze the bar contextually because, but volume is increasing. Importantly, as you've rightly noted there. But this bar here, I mean, arguably, you could kind of label this bar a little bit like no demand in an area of supply. Kind of no surprise that we come down. But when we do come down this time, Roman, first of all, where's the supply gone? It was increasing. This is the lowest volume kind of widespread bar we've had since this high. And we hold this support level.
Yeah.
And to me, it's a bit of an anomaly. Like, it is a good move to the downside, but why are we not breaking why are we not breaking? We hold here essentially, and then this bar here dips down to reverse and close. This is a very poor attempt to hold, as a matter of fact, as of right now. But still, though, Roman, even though this bar holds this support level, it is kind of the lowest close we have in this area, isn't it?
Yes.
At the support level. I mean, you can't argue that.
And under 100.
Yeah. So you have the psychological level. It's the lowest close we have at support. I mean, if we do get good, you can argue with this volume, it is ease of movement to the downside, which tells us there isn't a lot of selling friction. And now we're at support, and this is the buying we're met with. Now, arguably, would you say this is good buying? As of yet, I'd say no. So when you kind of think about all of this logically, yes, it doesn't break support, but when you break it down, it kind of still feels heavy here. Still feels weak. We expect to find buying at this level. It's held again, the Wednesday curse. I just need to see kind of what kind of buying will emerge here. But at this moment in time, it isn't great. It isn't great at all.
I would say that even the volume signature is more important than the price action today. Like show me more demand coming in here at this point, because if demand is not going to come in, then we're probably just going to deteriorate in terms of the rallies that we're having. I mean, like, look into this rally, look into this rally. There is a deterioration right there. Could we have another deterioration like this, and then we just continue to the downside? So it's going to be important to see what kind of volume signature we're going to have today, and like, definitely intrusion into this bar is going to be important. So this
Yeah,
could be just an attempt to rally. But this bar is always kind of catches our attention, and
it
William and I,
certainly does.
we usually
I
kind
mean,
of discuss this.
we also got to look about how far look, this rally we traced this far, this rally we traced this far, and we are at support level. I'm expecting the market to hold. I'm expecting a rally of sorts. The question is, how far will we rally into this bar? Because we can see here, top third, top 40%. Now, if we can say top 50, and then we can't start to come down, it's getting weaker. So the rallies, and arguably, you'd have to ask yourself as well, Roman, this is kind of the major support level. This is where we
Yes,
should find
yes.
the best
hmm
buying. And
hmm
as of yet, not particularly great.
By the way, Biden is on the trip to Israel and Saudi Arabia. I mean, obviously, there are some things beyond oil that needs to be discussed. And this whole idea about the oil call, going lower in such a bullish sentiment was pretty ballsy. But the thing about it is that the macros are kind of starting to catch up with the technicals. And there was a period of time when there was nothing that's going on. Like right here, there was nothing that was going on. So there is a question here from Alexander. Could this be a phase C? Like, meaning that, could this be a potential phase C? I would say that this whole structure, if we divide it into different segments, has probably those three segments to me. Segment number one, which is still bearish, even though it looks like, oh, it's a buying climax. But what is the ultimate result? We stop, and then we produce the change of behavior, and then we retrace the whole climactic run that we had. Bullish or bearish? More bearish than bullish. Then the second, phase of it, as I said, the phase of inactivity. So this phase you just eliminate in terms of the bias definition. And then the third phase that starts with this bar, and we're still currently in this phase. What is it? Supply is coming in, supply is increasing, supply is coming in. And what is the result of it? We're going down. We're having lower highs and lower lows. So if we would take phase one and phase three, just because phase two is just inactivity, what is the overall bias? Probably still to the downside. So therefore, just because we're in the proximity of the support, to think that this is phase C is appropriate, because we always, create different scenarios for confirmation and of failure. But what is the background, Alexander? And I would say that the background is still more bearish than it is bullish. William, would you concur with me on the bias, on the background
Yeah.
bias?
Oh, yeah. 100%.